Hello, traders. It is Wednesday evening, September 30th, and it is time for the weekly swing trading video. This is the end of the month, it's the end of the quarter, and the market looks pretty good right now. You can see how the market has come down and it tested the 100-day moving average last week, bounced off the 100-day moving average. The next day we had a long green candle closing on its high. That also looked really good. That was Friday's close. You can see how this downward sloping trend line has been penetrated to the upside. Monday we gapped higher, and since then we've been moving sideways. Today we had a nasty little bearish hammer here, and that was related to the stimulus bill. Looked like everything was going smoothly, the talks were good, and then all of a sudden we heard that the stimulus bill, the two sides are still miles apart. So the bounce that we got from Friday was really predicated on a stimulus bill being signed. Now, that's not to say that it won't still happen. As long as that promise is still out there, the bid to the market will be relatively strong. The other thing that we can see is that on the way down, this is not a free fall like we saw back in March. This is a nice orderly decline. 3 steps down, 2 steps back, 3 steps down, 2 steps back. Now we've got a nice little support level and we've broken above this downward sloping trend line. We had a similar instance just last summer. So let's set the table here. We had this upward sloping channel. We broke out above the upper end of that channel, and that told us that we were in a buying climax, not to do anything but to wait for prices to come in. That's exactly what they've done, and now we have support. Back here, we had the same situation heading into June. You can see how the market got overextended. It got through the upper end of this trend line, and that told us that this was a buying climax. We pulled back, tested support, and then the market started to gradually grind higher. We had a downward sloping trend line that was breached to the upside, and we're off to the races. So I think we have a similar pattern set up. Yes, we could come back down and we could challenge the 100-day moving average, but if we do, I believe it will be very brief. We won't spend much time there. We're not going to be panicked about it. We just need to find the right stocks. You can also see how on this retest, the market came back, but it found a higher low. I believe that would happen in this instance also. I don't think we're going to get back down to the 100-day moving average. Here's something else that I'd like to point out. I get a lot of questions about the 1OP indicator. Will it work on longer time frames? Will it work on stocks? Yes, but you really have to know how to interpret the 1OP signal. But yes, it absolutely will work, and I'm going to show you how it works on a longer term basis on the SPY. So right here, you've got the market pulling back. You can see how that bearish cross was actually a very good cross. The market did as expected. You have a bullish cross in here. Yes, that worked fine. Now we've got a bearish cross in here, but the market flatlines. When we have those compressions and the 1OP indicator is falling, we know that is a bullish divergence. Here we get a bullish 1OP cross. That ends up being a very nice entry point for a trade. Here the 1OP indicator climaxes and it starts to pull back. That is a bearish cross. But did the market sell off? No. It moved sideways. Bullish divergence. So you get your bullish divergence here, get a bullish cross right here. That's a nice bullish cross all the way up here. And now we get our bearish cross here, which was an excellent sell signal. And you can see how that's come into play all the way until right here. And now we've actually been moving higher with the indicator moving higher. So it's telling me that this is a bottoming process and that yes, we can get long here. I'm not looking for the market to go back and challenge the all-time high before the election. I think there's just too much uncertainty for that. We've got earnings season starting to come up, and we are going to take advantage of that. So I'm pretty bullish in here. I think that selling some out of the money bullish put spreads is in order, and I'm going to actually buy some calls today. But we're going to do it in a creative fashion so that we can use time decay to our advantage. Let's get started. I got a lot to cover. Before I do that, I just want to highlight a couple of trades that we tried to get into. We'll take a look at Twitter. We needed a little bit of a market pullback last week. We barely got one on Thursday, and you can see how the stock It has been moving higher. We were playing off of that breakout right there, and we were trying to sell a bullish put spread below the support level. Never had a chance. But the stock performed well. That's the key. We have to pick good stocks. On DOCU, we're trying to sell this 180, 175 bullish put spread. Never had a chance. Stock has been able to tread water and move a little bit higher. Finally, CRWD. Again, same instance here. Nice price pattern. Stock able to tread water. We're looking to sell a bullish put spread down here on that horizontal resistance. Now support below that 50-day moving average. Never got a chance to get in. We didn't get that market pullback, and we needed some cooperation from the market. But a week ago, when I did the video, the market was still looking pretty iffy. This is where we were a week ago, and you can see how we came down and tested the 100-day moving average briefly on Thursday. This was our chance to get filled right here, but look at that nasty price action on Wednesday. Well, I was not going to be super aggressive trying to sell out of the money bullish put spreads on a candle like that made a new relative low. That would have been absolutely foolish. We had a chance Thursday morning to try and get filled on some of our spreads. Didn't happen. Friday morning, whoosh, market rallied up on that promising stimulus bill, and it's continued to float higher. So I think the next dip will give us a higher low, and then I will be even more confident if we can't get any of our trades off tomorrow or Friday. I promise you, when I see the pattern, I'm going to get more aggressive, and I will step up to the plate and will be banging trades. So your patience has paid off. We've avoided this nasty decline right here, and now we're sitting waiting for opportunities to line up, and they are lining up. So let me start off with our trades, and we're going to go into first trade of the day. We're going to look at Walmart. And you can see, actually, Dave Wise in the chat room pointed this stock out today. When I took a look at the chart, I went, yep, I really like this one. So you can see a horizontal resistance level right here. Resistance, resistance, resistance. Now that becomes support. And you can see how the stock was not able to quite get down to that level before it found buyers. Tried, bounce, tried, bounce, tried, bounce. So this is a very significant level right here at the 133.64 level approximately. We are going to go inside of that, meaning we're going to go below that. We're going to sell a 133, 132 bullish put spread. So we've got support right here at approximately 135. That would be horizontal support. We've got the 50-day moving average also coming into play there. And as we go lower down to that 134 price level, now we've got that horizontal resistance, which will come into play. Multiple forms of support. Perfect. That's what we want. That increases our probability of success. Walmart is not a big mover, so we're going to have to go out in time a little bit. We're going to have to go out to the October 23 expiration. So we're going to click on the 133 put. We're going to click on the 132 put. We know that because there's a dollar between these strike prices, we are going to be trying to get a 20-cent credit for this. And you can see off the screen here that it is negative 13 cents bid, offered at 49 cents. I believe that 20 cents, we've got a pretty decent chance of getting filled on this right away, especially if there's a little bit of follow-through selling after today. Today, the air got let out of the balloon. The stimulus bill is not going to be signed. I'm expecting the downside to be tested a little bit tomorrow morning before the market can rally. So let's go over this trade one more time. We're going to be selling the Walmart October 23rd 133 puts, and we're going to be buying the Walmart October 23 132 puts. And we're going to be doing that for a 20-cent credit. Now, it's important for us this time of year to also be hovering over the E, because that tells us when the next expected earnings announcement is. In this case, it's 11/13, so that spread will expire way before earnings. Very important when we're selling premium, we want to make sure that we are selling spreads that expire before options expiration. When we are buying option premium, we want exactly the opposite. We want to make sure that those options span earnings because the option implied volatility stays in, the time premium stays in, those options retain their value very, very well. So please make sure that you understand that concept. So that's our first trade. The next stock that I'm going to highlight has had a really nice technical run. You can see it is NIO, Chinese car manufacturer. You can see how this was resistance, 1, 2, and then we get a breakout to the upside. This now becomes support, and I'm going to drop my crosshair, and you can see 1, almost 2 supports, but here you find buyers before it even gets down to that support level. Oh, I like that even better. Plus, we have the 50-day moving average coming into play right here at about the $16 level. So I'm pretty happy with this stock if I can get it anywhere around this $17 horizontal support level right there. Well, what we're going to do in this case, so I would like to buy this stock, period. I'd like to buy this stock. I'm going to put up the SPY. You can see market down, 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 stock treading water. Market gets a little bit of a bump, boom. Stock is trying to make a new relative high. It tried to break out today, didn't have enough strength from the market to do that. I think the stock is going to move higher. If you're going to give me a chance to buy that stock at $17, would I? You betcha. So that's exactly what we're going to do is we're going to set the trade up accordingly. I'm going to click trade, bring up the NIO option chain. This stock has pretty rich premiums. And I'm going to click on the $17 put that expires on October 16th. So we only have 2 weeks and 2 days on this trade, not a very long-term trade. And what we're going to be doing is we're going to be selling the October 16th $17 puts, and we're going to be trying to get 34 cents for those. That's where they're asked right now. A little bit of a downtick in the stock. We should get 34 cents. How does the math line up for this one? Well, if we are selling that put naked, we have to put up 20% of the strike price, roughly. And in this instance, we would have to put up about $3.40 to do this trade. If I'm able to sell these puts for 34 cents, that means that over the course of 2 little weeks, I'm going to make a 10% return in 2 weeks on this trade. So I'm going to sell the NIO October 16 expiration, the $17 puts for 34 cents. I think we've got a very good chance of getting filled on this. So let's take this down and let's take a look at the support levels that we've got along the way one more time, because those support levels, they increase our probability of success. So we've got the horizontal support right here running through that prior resistance level right around 1670. We've got the 50-day moving average at the 50-day moving average at 1620. So right around this 1620, 1650 level is major support. We've also got horizontal support right here around the $17 level, and we've got relative strength in the stock, and we have excellent volume. Lots of check boxes marked on this one, and we've got a good chance to get filled on this. So I'm going to continue to go down the list here, and we're going to continue to take a look at other opportunities. But before I do that, I'm going to, let me get this SPY off of here. I need to change the chart. And I'm going to go into the custom search engine, and we're going to take a look at some searches that we can use right now. That is really the point to these Wednesday night videos, is for me to show you ways to use the custom search engine so that you can find your own opportunities. And there are so many different search variables and so many combinations that I hope that when you're sitting at home and you're trying to think of how the next day might set up or how to find trading opportunities, come in, tinker with it, toy around with it, try and find some combinations that might work for you. One of the most powerful things we can use is earnings season. And you know that I've gone through all the prior earnings releases over the last 3 years. That's 12 quarters worth of data. And I've found stocks that have a tendency to rally into earnings season. 75% of the time, when they're inside of that 2-week window before earnings, they have a tendency to move higher. Well, how does that benefit me? I know that at very minimum, the stock should be able to maintain its current price level. That means I can sell out of the money bullish put spreads on those stocks on the notion that that stock is going to have strength into earnings season. That's exactly what I'm going to do for our following two picks. One of them, you'll see here, let's go through all the different search variables. So I'd like to have good option liquidity, obviously. So I'm going to put that value at 0 to 15. And I want to have weekly options, of course, because we're trying to sell option premium, ideally inside of 3 weeks to take advantage of time premium decay. I want to make sure that I have a pre-earnings bull stock selected. Now, in this particular instance, I went out in time. I said, show me a stock that's going to release earnings before October 30th and after September 30th. So I've got a 1-month span here, and these are the stocks that came up. But I'm not just going to leave it at that. I'd also like to see stocks that have relative strength. Boy, this is a really nice list of stocks, and there's one that I want to show you right now, Netflix. Netflix has a tendency to rally into earnings. Let's hover over that E. 10/20. It's hard to imagine that earnings season is only 3 weeks away. Yes, 10/20. So that gives us an expiration that we can take advantage of. So I'm going to take a look at how the technicals line up. Resistance, resistance, support, poke through a little bit, but you can see here, support, support. Let's put up that crosshair tool. You can line it up. You can see exactly where that comes into play. Resistance, support, support. So we're going to try and go as close to that level as we possibly can. And we've got the 100-day moving average to lean on. Now, I tried to squeeze as much as I could out of this particular trade, meaning I wanted to go as far out as I possibly could. And you can see that that 467.40 level would have been much nicer right in there because we had so many different support levels right there. I don't think we're going to get the credit that we want. And we aren't going to get it tomorrow or Friday because those premiums, they're not going to put a lot of premium into it 2 weeks out when the stock is all the way up at about $500. So let's put up the option chain for that. This is a short-term trade. Expires October 16th, which is a week before it announces earnings. Actually, it's a half a week before it announces earnings. So we're going to come down, and in this particular instance, we're going to look at the 375 puts, and you can see the 100-day moving average, not 375, we need to go to 475, excuse me. So we're going to go down to the 475 strike. And actually, I'm looking at my staged orders. I went down to the 470 strike. So that does get us inside the 100-day moving average, and it almost gets us down to this horizontal support right here, which it has found a couple of times here. So we're going to be selling the Netflix, October 16th expiration, we're selling the 470 puts and we're buying the 465 puts. Now we know that there are $5 between the strike prices, so I'd like to get $1 for this credit. $4 is what we'll have to put up in margin. That's also our maximum risk. $1 divided by $4 equals 25%. Let's take a look at where that spread's currently trading. You can see that it is 40 cents bid, offered at 155. I think that we can get our $1 for this. All we need is just a tiny pullback in the stock. It has a $10 range each day, so it moves. That to me would be a really, really nice trade. And we've got probability working on our side, not only because of the current relative strength, but also because the stock has that bullish tendency heading into earnings, and it posts earnings 3 weeks from now. I really like this trade. And it's also going to set us up for the next trade that I'm going to show you. So the final trade that I'm going to show you is also on this list, and it actually came to me with more stringent criteria. The extra criteria that I added was heavy volume today. And that's it right there. Abbott is the stock that I want to take a look at, and you can see how it has bounced off of that 50-day moving average and it's continued to move higher. So let's do our analysis here. We've got resistance right here that has now become support. The 50-day moving average has come into line here. You can see how the stock pulled back briefly with that market pullback. It bounced immediately with a big bullish engulfing candle right here. And since then, it has continued to move higher. Let's take a look at the 5-minute chart. You can see what it did today. So stock was off to the races today. I made good money. I saw this on one of the searches. I wanted to be in on that right away. You look at the volume that it had into the close today. I'm going to take that 10P indicator off for a second. We're going to put up 10 SI. You'll be able to see the relative strength. There's your relative strength throughout the day, relative strength into the closing bell, really good volume. And if I put up that SPY chart, you'll see that when the market absolutely tanked, look at that big sell-off. This stock actually held very, very well, and it closed pretty dang close to its high. Well, that's fantastic. There's news on it. The news is that Abbott is going to start delivering 100 million test kits to the government that the government has purchased. So this stock also has a tendency to do what? Rally into earnings, and it announces fairly soon. So let's take a look at that earnings release date. We'll click daily here. I'm going to take off the 10 SI indicator just to clean the chart up a little bit. You can see it releases earnings on October 21st. Very, very important to remember. What do we like to do? We like to sell options that expire before the earnings announcement. And we like to buy options that expire after the earnings announcement. So we have an expiration cycle on October 16th that expires before that earnings date. We also have an option expiration just after this that would expire after the earnings announcement. So we are going to be buying some options on this one, and we're going to be selling some options. So I'm going to bring up the trade screen here, and we'll go to Abbott. So we know that October 16th, we want to be a seller of option premium. Where do we want to be selling these options? Well, I'd like to lever off of this support level right in here, and I'd like to take advantage of that 50-day moving average as much as I possibly can. Now, I know that this stock has a bias to the upside heading into earnings, and I know that it has really good news. I have to expect that there's going to be some optimism going into Abbott's earnings announcement. How high could this stock possibly go before earnings? Well, my guess is it could challenge the all-time high if it gets a nice head of steam, and if the market starts to grind higher, a little bit higher, will help fuel this move. And we can see, based on prior moves, we'll go back to earnings announcements. So there's the earnings before the open. Look at that beautiful rally. That stock came up from $85 to $95 right during that stretch. Look at this move a couple weeks before earnings. Now, I'm not expecting this kind of move, but it went from $77.50 all the way to $95 before earnings announcement. So this is the kind of move we're trying to take advantage of. I think it's got a shot to get up to that high. So let's go back in. Let's take a look. And we'll see what we can get for the 104, 103 bullish put spread. You know, I've got to get 20 cents for this. That's just rote. You can see that there's $1 between the strike prices. And that's what we're going to try and do is we're going to try and get 20 cents for this out of the money bullish put spread. We're going to be selling the Abbott October 16th 104 puts. We're going to be buying the Abbott 16th 103 puts, and we're going to be doing this for a credit of 20 cents. That's not it. We're also going to be doing something else. Now, I'd mentioned to you how high I think the stock can get. I think it's got a shot to maybe get up. You can see that the high right here was 114.19. I think it could possibly get up to $115 before that earnings announcement. So that's what I want to play off of. And I'm going to sell some options at the 115 strike. I'm going to sell the 115 calls, but I'm also going to buy some calls. So this is going to be a diagonal call spread. So I'm going to reset this, although I can show you that we can do this as a package using Option Stalker. So now I need to go down to the October 23rd expiration, and I'm going to click on the 110 calls. And you can see the 110 calls are 233 bid, offered at 365. Well, that's a very wide bid-ask spread to navigate. Part of the reason for that wide bid-ask spread is that that's after the earnings announcement. So those options are going to trade in a pretty wide range, and that's okay because they're also going to retain their value. Now, I'm not going to be paying $3.65 for these, I'll tell you that right now. But I think if we're in somewhere around the $3.10 level, that's probably where we'd be able to buy those. And if we sell the other spread, the other calls, the 115 calls, we should be able to get 40 cents for those minimum, probably 45 cents. Well, that puts us in at a $2.70 debit on the call debit spread here. So there are two different trades going on. In essence, what I'd love to do is I'd like to be able to have everything expire worthless except for those 110 calls, and I'd like to be long those into the earnings announcement for $2.50. I think we've got a chance to maybe sell these calls for a double. So let's take a look at you can see here that the entire spread is 131 bid, offered at 339. We're going to be trying to get in there somewhere around $2.50, which I think is very doable. So if you're comfortable putting in a multi-leg spread like this, you can do that. But I think that if you break it up into individual components on the open, you might actually have an easier chance right on the open to get filled on it. You can use either method is fine. But in the staged order entry screen, I have it broken down into two trades. So if you're more comfortable entering it like that, you can. So let me just reiterate the two different spreads we're doing. October 16th, we're going to be selling a bullish put spread. We're selling the 104 puts, buying the 103 puts. We're going to try and do that for a 20-cent credit. Then we're going to do a diagonal spread. We're going to be buying the October 23 110 calls, which are closer to the money, and we're going to be selling the October 16th that expire a week earlier. We're going to be selling the 15 calls, and this diagonal spread we're going to be doing for a net debit of $2.70. And I'm going to reset all of this, and I'll be able to show you the debit spread alone, that diagonal spread. We're going to go back into the October 16th expiration, and there you can see that debit spread is $1.80 bid offered at $3.21. We're trying to buy it somewhere in the $2.70 range, so we are toward the ask side. I think we should be able to get this entire spread done for approximately $2.50. Now, if I go into the staged order entry screen, you're going to see everything set up for you already. There you've got the NIO put spread that we're going to be selling for 34 cents. This is where you've got the bullish put spread for a 20-cent credit on Abbott. This is where you've got your diagonal spread, buying the October 23 110 calls and selling the October 16 115 calls for a $2.70 debit. You've got your Netflix October 16th 470 465 bullish put spread for a dollar credit, and you've got your Walmart October 23rd 133 puts that we're selling and buying the 132 puts for a credit of 20 cents. I want to get some spreads done now. So the time to get a little bit more aggressive is here and now. So I think that we're going to be filled on at least a couple of these spreads. NIO tomorrow should be a slam dunk. I think that Netflix, we need the stock to pull back a little bit, not much, even $4, $5 should do it. Stock's got a $10 range, no problem. Walmart, we're really close on that one too. I think any little bit of a pullback will get us filled on that, but may not even need that. Abbott, I also think we'll be able to get in right away. So by the time I do this video next week, I am expecting to have some positions on. We've waited very, very patiently, and I think that's going to pay off because we're going to have some nice trades going into the next few weeks. Focus on those earnings searches and use that pre-earnings bull criteria. Again, it's in custom search. Mark pre-bull. Mark how far out you'd like to go for earnings. So what I like to do when I'm looking for bullish put spreads, by the way, is this says September 30th. Well, I can't do any trades today. I need at least a couple of weeks where I've got an expiration cycle that I can use. So I'm going to go with October, let's say it can announce after October 19th. Well, that gives me 2 expiration cycles to work with. I've got all the other criteria marked. Let me mark off a couple of these boxes here, and let's see what comes up. Abbott. Now I'm wondering why. Because of the heavy volume. There we go. Now, look at all these stocks that you've got in here. Lots of choices. All of these, you've got 2 expiration cycles that you can use, that you can lean on, and you know that every single one of these stocks has a tendency to rally into earnings. And man, I'm seeing some stocks on here that really interest me, like BYND. Oh yeah. Look at that relative strength right in there. It's breaking out to a new high. That looks pretty dang good to me. If I can get in anywhere around here, 138, may not be able to get a lot of premium for that. I might have to go higher in here. That looks good. Caterpillar, I'm not so crazy about heavy equipment right now. Goldman Sachs, I'm not too crazy about the bank stocks. IBM, not real crazy about that stock either. I'd have to be able to get down below this horizontal support right around the 115 level. That might work pretty well. The stock is $8 out with a couple of weeks to go. Intel is one that is interesting. If it gets into this gap right here, and we know that it has a tendency to rally into earnings season, what would I do with that information? By now, you should know what I'm going to say. I'm going to click GTC, and I'm going to click the top of that candle, and now I have my GTC alert line. I turn on my computer, and there's a pop-up, and it says, hey, Intel has just breached that really important price point that you identified. And I look at it and I go, I like this. Intel into earnings. And it's got a free path to the 100-day moving average as it starts to fill in the gap. I like Intel, by the way. I'm probably going to day trade this. If I had seen this earlier, I might even think about doing a call debit spread past the earnings, which is on 1022. So here I'd probably buy a 1023 call debit spread if that stock breaks out. See how easy? It's really easy. That's your search right there. These stocks are going to be announcing, and they tend to rally into earnings season, and they've already got relative strength. Look at all these candidates. All you have to do is use the same routine that I just did, use some basic technical analysis, try and have as many check boxes as you can marked, and that's going to increase your probability of success. Go out of the money, let time decay work its magic. That's all I've got for you tonight. If you're watching this video on YouTube, I've released it 2 days after I released it to members. So this is Wednesday night. You'll be able to see it on Saturday. Please take a look at the picks, see how they fared, see if my market analysis is correct. For those of you who like the content, please give it a thumbs up. Let's see if we can get some trades off finally. Good luck trading. We'll see you tomorrow. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.